Let's bring in Scott Bauer, CEO of Prosper Trading Academy. So Scott, look, this thing is a runaway train or something, bike, I don't know. But look, do you want to get in front of that?
You know, I'm a bit cautious for earnings only because they have got to just blow numbers out of the water. Not just report great top and bottom line, but obviously the guidance here. I love the stock. Long term, they are building up an ecosystem of product that you talk about fitness, and it's a Peloton now, right? Not nearly to the extent that Apple ecosystem is, but they're building that up, and their recurring revenue model is phenomenal. And that's the part that I think, in terms of what Michael was talking about, how do you reach maybe the not the affluent demographic, but maybe a little bit lower? Okay, so you don't get a bike, you don't get a treadmill, but they have this recurring payment system. It's recurring revenue. So I love the long-term prospects. I'm a little bit cautious for the earnings print here. So what I'm doing is, and Kevin Hinks would really like this, it's almost like a little bit of a stock replacement type of trade. I'm looking to sell the November 20th, so going out a couple weeks here, 140 call. I want to take a little bit of that premium off, but I'm buying a deeper in the money call going out a whole nother month, the December 130 call. That's going to cost me around $7. It's not a cheap trade at all. It is very expensive. However, I know what my risk is. And the reason I'm doing this, Oliver, is because I want to take advantage of any sort of pullback here in the interim off of the earnings print, which I believe the stock will recover nicely. If we don't get a pullback at all on the earnings print, then this is a gangbuster trade. But I like giving myself a little time here on this type of setup, especially going into the holidays. Everybody wants to get back into that fitness mode. I just love it.
Okay, now you're going out to 140 to sell the call in November. Yep. So that's the high, right? And basically what you're saying is that kind of quick snap to a record is not in your playbook. But if you get there, you're going to be okay. You're going to be able to ride that for a little bit until the profit starts to go the other way, but it's still profit.
It's absolutely going to be profit. In fact, on a spread like this, let's say the stock went to 200, 500. I'm just throwing numbers out there. It's still a profitable trade. So I've got a lot of upside exposure here. I definitely have some downside as well, but I'm buying myself some time for this thing to materialize.
Okay. So Scott, what then, when you look at these, when you use the calendar perspective of different expiries, walk me through kind of your process and looking at it the day after when you wake up here tomorrow and see how it's trading. What's most important to you? Do you want to see if it's going in your direction, how quickly the vol is coming out of it, or what's most important?
It's really a yes and yes. Obviously, this is a very bullish trade. It is a very directional trade to the upside. So any move to the upside is going to help. But also the big volatility crush, which we know is going to happen after the earnings print, that should help as well, because the November option will get crushed a lot more from a volatility perspective than the December option will.
Okay. All right. Scott Bauer, thank you, sir, for the trade.
Thank you.
Bullish moves on Peloton. Shares not too far off from those highs. And we know this company can move quick.